Are you looking to build a steady income from your investments without constantly chasing individual stocks? In today's video, we're counting down top 10 Canadian dividend ETFs for 2025. Whether you're investing through your TFSA, RRSP, or a regular brokerage account, these funds offer a mix of income, diversification, and long-term growth. I'll break down what each ETF does, how it performs, and why it made the cut. Let's jump right in. Starting off at number 10 is the CI Wisdom Tree Canada Quality Dividend Growth Index ETF, ticker DGRC. This one targets Canadian companies with a combination of strong fundamentals and dividend growth potential, a nice mix of quality and income. It currently offers a yield of around 2.37% and the expense ratio of 0.27%, which is fair considering it's not purely passive. DGRC holds around 40 stocks, primarily in financials, energy, and utilities. The strategy aims to capture companies with strong fundamentals, so think of it as a steady, disciplined choice for long-term dividend growth. If you're looking for dividend growth with some upside potential, DGRC is a lesser known but a worthy contender. At number 9, we have Horizon Active Canadian Dividend ETF, ticker HAL. This fund holds Canadian dividend stocks with an active management strategy. The aim is total return and dividend growth. With an expense ratio of around 0.72% and quarterly payouts, it is on the higher cost side. HAL also has about 114 million AUM, and while it includes big names like RBC, TD, and Enbridge, recent returns haven't been strong. For those who believe in active management, it could be a pick and hold play, but it lags behind more efficient options. Coming in at number 8 is Fidelity Canadian High Dividend Index ETF, ticker FCCD. With a focus on Canadian banks, energy, and utilities, FCCD delivers a monthly yield of 4.73%. Its expense ratio is 0.4%, and AUM sits around $228 million. While it offers decent diversification and a solid income stream, it is still relatively new and smaller in size, which can mean low liquidity. It is best suited for complementary income fund rather than a portfolio core. At number 7, we have iShares Canadian Select Dividend Index ETF, ticker XDIV. It invests in 30 high dividend stocks and leans heavily into financials, including RBC, TD, and BMO. The fund pays a monthly dividend with current yield of 4.01%, and it has about $1.82 billion in AUM. The expense ratio is 0.56%, which is a bit higher for a passive fund. Still, if you prefer a more concentrated approach focused on stable Canadian giants, XDV is a solid pick. Number 6 goes to the iShares S&P TSX 60 Index ETF, ticker XIU. While not technically a dividend-focused ETF, XIU invests in 60 of Canada's largest and most established companies, most of which paid strong dividends. It has an extremely low expense ratio of 0.18%, AUM over $16.84 billion, and a dividend yield of around 2.72% paid quarterly. It is ideal for investors who want dividend income plus long-term capital growth from the TSX blue chips. At number 5 is the iShares Core MSCI Canadian Quality Dividend Index ETF, ticker XDIV. It focuses on just 18 high-quality Canadian dividend stocks, screened for financial strength and stability. It pays a monthly dividend with a yield of 4.08%. The expense ratio is just 0.13%, making it one of the cheapest ETFs on the list. With AUM of nearly $2.48 billion, this ETF is ideal for investors who want a focused, high-quality dividend portfolio at low cost. Number 4 is the iShares Canadian Dividend Aristocrats ETF, ticker CDZ. This fund holds companies that have increased their dividends every year for at least 5 years. You get a monthly yield of 3.66% across 90 holdings, including names like Enbridge, Manulife, and TC Energy. The expense ratio is 0.69%, and the AUM is around $960 million. For dividend growth investors, CDZ offers both income and consistency. Coming in at number 3 is the BMO Canadian Dividend ETF, ticker ZDV. It invests in over 50 dividend-paying Canadian stocks, screened for payout ratios and dividend growth. ZDV pays a monthly dividend with a yield of 3.56% and has an expense ratio of 0.39%. With about $1.15 billion under management, this ETF offers a great balance between high yield and diversification, making it a strong core option for income-focused investors. Runner-up on our list is iShares S&P TSX Composite High Dividend Index ETF, ticker XEI. This fund holds 75 Canadian high dividend stocks, diversified across sectors like energy, financials, and utilities. It pays a monthly dividend with a yield of 5.34% and has a low expense ratio of 0.24%. With AUM of $1.98 billion, it is a great all-in-one option for investors looking for income without giving up diversification. And finally, at number 1, we have Vanguard FTSE Canadian High Dividend Yield Index ETF, ticker VDVI. This ETF is a favorite among income investors for simplicity and reliability. It holds over 50 high-yield Canadian stocks, heavily weighted in financials and energy. The yield is 4.41% paid monthly, and the expense ratio is just 0.23%. With AUM of $3.87 billion, it is one of the most trusted and efficient dividend ETFs in Canada. If you want one fund to build a solid dividend income base, VDY checks almost every box. So there you have it, the top 10 Canadian dividend ETFs for 2025. Whether you want high yield, dividend growth, or just simple exposure to Canada's top companies, these funds give you plenty of choice. Let me know in the comments, which one are you buying? And if you found this video helpful, don't forget to like, subscribe, and check out my breakdown of top 5 Canadian stocks for 2025. See you in the next one.